Hey, welcome to the Closing Beat, everybody. Happy Wednesday to you. How you doing out there? All is good? All is good, I hope. We are financial advisors here at Jazz Wealth, and we like to do this show every day, except for tomorrow. There'll be no show tomorrow. I'm going to be going to see David Copperfield. And what did I just read? You need a review because you were less than impressed. I don't want to hear that. I don't want to hear. No, I want to hear magical. I want to hear it was a great time. But I'll be out there. I'll be in Vegas. If anybody around wants to say hi or whatever, stay in a couple of days, and I'll be back, see a little magic, and then come. I have no other plans, really. I'm sure I'll walk around and see some good stuff. I've actually never really been. So, yeah, that's that. No show tomorrow. We'll be back next week, of course. While other advisors are playing checkers, we are playing chess. Imagine, I did this just this morning with somebody. Could you pay for your child's tuition for college? They're in college. By using highly appreciated stock without paying capital gains tax. Oh, that got my day going right there. I didn't need no coffee today. I was like, what? Come on. This is free, essentially, tuition because the gains in the stock are going to, the more than covers their tuition. So they wouldn't have done this. It would have cost them a lot of money if they wouldn't have done this. So I'm glad that I talked to them. If you want to check us out, jazzwealth.com. We just like to help get your dough straight. And, of course, teach along the way. We're really big on that one. Tomorrow will be Wine and Wealth. Last week we did new tax laws coming your way. Looking forward to that. We'll actually talk a little bit about that later. And then tomorrow's class, Eric's going to do the strategies behind the 529. So you know the rules, all the changes. How do you make the most of them? Like, how do you get the advantage there? So we're going to talk about that. We got our VP picks in the house here going. I've covered everybody so far. I'm going with unknown female. White female. No, right? Yeah, I go with unknown non-white female. Eric's going unknown female that is white. Doug's in the mix here. What did he pick? White female politician, I believe, was Doug's pick, if I'm not mistaken there. So everybody's got a guess on the board. We'll see. There's something fun to do. You know what I mean there. All right, let's talk about the stock market here today. It's trouble with the stock market, right? We have what's known as a thin stock market, both today and year to date. Right? It's really troublesome there. We have more sectors lower than are higher, right? There's only 4 sectors positive on the year so far. Today, you look at the stock market and only large cap growth was able to put up a positive or a return. So it's really difficult when the stock market won't fully participate. In other words, just a handful of stocks are lifting the market. That's fine. What happens when that handful stops, right? Tesla reported earnings after hours. Uh-oh, a little bit of weakness there. What happens if Netflix starts to pull back some of the tech names? Oh boy, what do we got going on there? Really, really difficult. We don't want to see that for the long term. Now, let's just go to the S&P here. Can I just pop on over? There we go. So if you're looking at the S&P, we hit new highs. We technically closed there. Okay. So we've got that going on. When you look at the sectors in the S&P, like I just said a second ago, there's only 4 sectors that are positive year to date. How can that be? Right? Everything seems so strong. Look, it's doing great. We're going higher. Only 4 sectors. There's very limited participation. And what I want to point out, there's a wide spread between the top performers and the underperformers. So tech would be your leader with over 5% gains, currently outperforming the stock market, all that, yada, yada. If you look on the downside there, you've got utilities after having a nice little bounce off lows there, now pulling back, it's down 5%. There's a 10% spread between the top and bottom performers. Everything else kind of lands somewhere in the middle there. So a little bit frustrating if you are a broad market participant. And I know I keep saying that, but that's unfortunately where we stand. If we look at the NASDAQ, there we go. So Netflix, check this out. Netflix, right? Obviously, great day. Earnings response to the move here today. Netflix and AMD. Okay, AMD is one of those that okay, it's a nice fine uptrend, and now it's going vertical. I was talking to a client about that earlier. We like uptrends, Prudential being a great example there. We've had that for a while, one of our better performers. Nice uptrend is fine. That can go on forever, right? Price increases that are steady over time, your home value, collectible assets, and things like that. But when prices go vertical, like, oh my God, now I've got to have the Tom Brady football card where he's both football and basketball. Oh my God, I got to have this card. Prices go vertical. What happens? They don't stay that way for long. Today in the NASDAQ, Netflix and AMD were responsible for 50 points on the NASDAQ. In other words, if those two stocks did not do what they did today, the NASDAQ would be easily negative on the day. That's what I mean by that thin participation. You don't like to see things like that. So, obviously something to pay attention to. Fun fact, the NASDAQ at this point is now 150% off the COVID lows. So when the world was ending and, oh my God, it's never going to come back, we're 150% higher than where that low was, right? We're currently in a bull market, the NASDAQ is, and 65% is the gain in this current bull market. It's been just over 400 days, 408 days to be exact. The average bull market in the NASDAQ gains 163% and lasts about 800 days. So what that tells you is, if you believe in that stuff, is, well, we're about halfway there. There's still a lot more room to go gains-wise, and there's also still a lot more time left in this potential bull market here for the NASDAQ. What I don't like is the fact that just a couple names are moving the NASDAQ higher. As long as that continues, I'll stay quiet, That doesn't normally continue, no. So a little bit tricky there, all right? All right, let's go through a couple others here and then try something different here. So we got, let me just make sure you can see this. All right, so let's go, we did the NASDAQ. We've got the Dow here sitting, oops, no, that's Bitcoin. There's the Dow. So the Dow pulling back ever so slightly here today. A lot of jostling with the earnings that have come out over the last couple days. Gold pulling back 11 points. The Russell 2000 giving you that pullback. So it's probably the best dollar cost averaging index at this point. If you were dollar cost averaging, you're pretty happy as compared to dollar cost averaging in the NASDAQ so far year to date. Bonds continuing to pull back, which means interest rates are continuing to go just very slightly higher. And this is not like be scared or anything. Short term, long term, they both did the same thing today. And crude oil, maybe, just maybe, trying to move outside of this range. I don't know. We'll have to see. It's not something I pay too much attention to because it's stuck in there right now. When it gets a little exciting, then I talk about it more. I start watching it a little bit more. But right now, oil, energy, anything like that. Although energy did participate today, it was the top sector in the stock market, in the S&P. There's not much to really go on there. All right, common question that I've been getting here a lot. If the stock market is so good, Dustin, then why is there a rush? We just hit a record, actually, $8.8 trillion in money market and CDs. Why would people go safe if the stock market is doing so well? Could it be the lack of leadership, that thin market that we talked about? Could it be, there's going to be a recession, the belief around that because the inverted yield curves or whatever you want to follow there? These insanely high tech valuations, maybe that's causing people to just run for safety a little bit. The elections, is that something that scares you? There's all kinds of things, and there always is. But if the stock market is so good, then why are we all sitting with $8.8 trillion in money market and CDs there? Maybe it's just the fact that you get 5% on cash that you don't want to take risk with. That's like not such a bad thing. Maybe it's just that. The stats on this, I'll share this here with you in a moment. If you have cash, can you beat the stock market, the S&P? The answer is yes, you can. You won't consistently, but you can actually beat the performance of the S&P. It's just not the greatest odds. So we don't want to be in cash for very long. Over a 1-year time period, there's a 31% chance that holding cash will do better than the stock market. I don't like those odds. You know what I mean? That's not going to keep you in cash long. But for the safe money that you have, I don't want to take risk. I'm going to buy a house. I'm going to start a business. I'm going to retire, whatever it is. Getting a positive real yield on your money, in other words, 5% on your money market or CDs minus inflation gives you still a positive real yield. Okay, that explains it. So it's not that the stock market is bad. I think it's actually that people are greedy with the cash that they have to go get the most that they possibly can out of it. That's kind of interesting, right? Let's take a look at this here real quick because I just, put this little together for you. All right, here are the odds of your cash position beating the stock market over various time periods here. Over a 1-year time period, 31% chance. And you get that, right? That's just because maybe the stock market had a year that was down, and after inflation and total return, technically cash was a better investment. That's possible, right? 2022, great example, even though we had really low rates. So over a 2-year time period, gets a little worse. Over a 3- and 5-year time period, 1 in 5 shot that your cash will beat the market's returns. So it's not beneficial for you to stay in cash for very long. I'm not telling you to invest in the stock market. I'm just saying, well, we need to make sure we're getting the most out of our cash. If your goal is to be in the market, you could probably get away with it here and there, but it's obviously not going to beat the returns of the market. Over a 25 and 30-year period, you cannot beat the stock market by having cash. So sitting with cash under the sofa is just not, I don't think anybody thought that was a good investment idea, but that just goes to show, right? The longer you stay in cash, the longer you are missing out on returns there. All right. Well, we have earnings coming out. I saw Tesla miss there a little bit. Weaker deliveries. That stock's right around $200. Not actually that big of a move. So you put yourselves right back down here towards these lows. I haven't had a chance to fully go through everything just yet. We'll go through some of the others that we have here. eBay just comes out and they're like, our earnings when they come out, they're going to be at the high end of what you guys are expecting. All right, thanks for the update. This is not a pre-announcement. This is kind of like a pre-teaser announcement, right? So it's not quite official yet, but hey, now you know, you've got eBay stock. AT&T didn't do as good as Verizon. We talked about that yesterday. Weaker than expected earnings, and of course, well, not of course, but they did decide to lower their guidance. They only added about 500,000 new subs in terms of their wireless products. Remember, Verizon did 1.4 million. So for the moment, you can see the clear difference there. Verizon, AT&T. Verizon is winning the game. All right, Textron. There you go. All right, so you got a very sloppy but still breakout here on Textron here. They beat on earnings, their margins getting a little bit weak, and their backlog getting a little weak. Now, what do you think about this? They make airplanes, mostly. They have a finance department, but it's a very minimal part of their revenue. So they make airplanes. Your Cessnas, your jets, right? The Citations or Slotations for you pilots out there. They make all the different types of jets. So just think about this for a second. Margins compress, they get lower, and the backlog of people ordering jets got smaller. Why on earth did the stock go higher? Right? It leads back to what we talked about on Monday. Actually, I think last week. There is a bill going through Congress right now to bring back the 100% bonus depreciation and actually raise section, I keep wanting to say 529, that's not right. I've been talking 529s all day. Bonus, not bonus depreciation, but they're raising the number to where you can actually expense something that's expensive. Previously, I think it was around like $2 million. It's like $2.5 million now. So anyways, there's this bill going through Congress to bring back 100% bonus depreciation. Who do you think that benefits the most? People that want to buy a jet, right? Let's just say it. And it actually says aircraft in the bill. So the concept or the thought here by everybody is, oh my God, right? You're doing fine. They're selling lots of these things, just a little bit less than normal. But if they bring back, and it looks like they're going to pass that bonus depreciation as far as inside of the child tax credit bill, sneaky, right? If they do that, do you think their backlog of orders is going to go up or down for people that are in desperate need to buy something to get the bonus depreciation? 100% of it. If you have to write off a couple $1 million and you are in a position to do that, this is one of the guys that are going to benefit. It's one of the big obvious names. So I bet you that order backlog changes if that bill is passed, and we'll come back just for fun and check it out. Okay, Texas Instruments here. So overall, Texas Instruments did beat on earnings. They had to lower guidance because if you dig into it a little bit, their automotive, well, Every division was weak except for their enterprise services division. So if you've never looked at that, you can see how the automotive division, they've got their AI division, all that stuff. So a little bit weaker there. Every segment was just down a little bit. Hits the stock just a little bit. I mentioned Progressive just a little bit ago. We happen to own Progressive. So they report their earnings. All is good there. They beat, and you might notice they have moved to new highs. Remember, we talked about this before. Progressive and typically the insurance companies, when they're doing well, it tends to be a really boring stock to invest in. I'm okay with that, right? I just want it to grow. So obviously we don't own 100% of Progressive. That's not smart. But now we're getting to this point where, oh, it's getting just a little, don't go so far so fast, right? That parabolic move. Great example would be parabolic move. This is, I mean, obscenely parabolic. But your Digital World acquisition, the Truth Social company there. So that's parabolic. Notice how it cannot sustain that rate of change. Nothing in life, be it the Tom Brady card I was just mentioning, be it the, some random home market going crazy, nothing can beat that rate of change or can keep it consistent. So when you look at something like Progressive, it's fine now. Everything's fine. They've beat on earnings. I'm happy with everything I've looked at, but I don't like that it's going just a little bit too fast there. Yeah, speaking of the DWAC, this is the game you're playing. This is the rodeo you're on. That's what, a $25 run, highs to lows from today, over $25 there. So Trump wins in New Hampshire there. It doesn't matter. The company, you can love Trump. That's fine. I support everybody who is interested in political stuff. Go at it. Go fight your best fight. However, political emotions have no business in investing. I'm not saying politics doesn't have a place in investing. I'm saying the emotion of politics has no business in investing. In particular, I'm talking about this company. So it is not worth $2 billion like we saw yesterday. They lose money. Maybe they'll make money. I wish them well, right? But at the moment, it is not something you want to mess with. My goodness, you get yourself in trouble. All right, ASML, we happen to own this one as well. I'm happy, but a little frustrated. I don't like, again, when things go a little bit too far, too fast. It is an under the radar kind of an AI play. They're a Dutch company. And one of the things I thought was cool from their earnings report, if you don't follow or don't look at it there, they said that all that revenue that they have is from 2022. We haven't had a chance to fill 2023's orders yet. So what does that do? It makes a company's financials sustainable. The growth, it makes the growth sustainable, it makes it stable, it makes it consistent and predictable going forward, and people will pay for that. And so I'm glad we're in early, but yeah, that's what everybody's jumping all over here today. And then lastly, I think this is correct today. So yeah, you have to say on a closing basis, Meta is worth $1 trillion, over $1 trillion. They did hit it the other day, but now we're saying it's official. The market's closed on a closing basis. They are worth that much. So congratulations. All right, tomorrow's earnings, we have American Airlines, Humana, Southwest Airlines, Sherwin-Williams, Union Pacific, Valero, Capital One, and then getting into after hours, the excitement becomes T-Mobile, Visa, Western Digital, and KLA-Tencor, or they just say KLA now, I believe, but it used to be KLA-Tencor. If you have any questions, I'll take your questions here for you. And then we have to do Guess the Dow.
Almost a new leaderboard today. You got two new names there at the bottom, Keith, and I got the other one for sure here.
Tom.
Tom, yeah. That's those are the two new names. Just a small shift down a little bit. But yeah, that's your fresh leaderboard for today. And this is just for the chat. This isn't for you. You've been busy teaching, so I'm just talking to the chat here. It is very 1980s Godzilla-like. That's all. Cool. Have a good show.
Did I miss
I was
it?
just talking to the chat.
Oh, all right. My face? All right, let's see what questions you have there, and good luck. If you're playing Guess the Dow, you're of course welcome to play. AT&T looking bad, you don't like it. Section 179, thank you, MW. Yes, I kept wanting to say 529. It is Section 179. So in that bill, you have your bonus depreciation and adjustments to Section 179, which includes the aircraft limitations there. Thank you. That was, I talk, but in my head, I'm thinking, come on, Dustin, come on, let's do this. Yeah. Bigger, better fool theory, or the greater fool theory. Yeah, I was always taught the bigger, better fool theory. You always want to hope that if you buy something, there's a bigger and better fool, meaning they have more money, so they don't really care there. It's kind of like art. Yeah, I love it. Samuel. Actually, I haven't looked. I didn't see that today. Silver Sun, all wild here. So this used to be. Boy, it's been a while. This used to be a penny stock, right? Is this the one I'm thinking of? Nonetheless, when you look at something like this, here, I'll tell you what I'm looking at. You can see it. So when you see a stock like this doesn't mean it's bad, but as I hover over this, look up here, right there. See how it's moving? So how many people are participating in this today? 170,000. Okay, that's 170 people if they bought 1,000 shares. And it's a cheap stock, so maybe they bought more. If you look at the order flow, you could probably see 179,000. There's a lot right now because of all the action. If you go back to when things calm down, you have 1,000 to maybe 30,000 people a day. That I don't care what the stock is doing, what's happened, who is now taken over, or what board member did this or that. I personally, as a company, right, we can't involve ourselves with that because, not to brag, but we're at like $340 million, and if we can't move that, you know what I mean? We get in trouble if we start saying, oh, we're just going to put 10 million in this one and spike it. We're not allowed to do that. I mean, we could do it, but it's frowned upon in a legal way, like handcuffs kind of stuff. I love it. Breaking and breaking up. NVIDIA, you think is a good short? You don't like AMD better? Just, throwing ideas. AMD a little more vertical, a little more parabolic. Is that not your thing? I can't tell you what to do. I'm just asking there. What's the Godzilla thing? I got to know the Godzilla thing.
You were a little out of sync at the beginning, but I think it blipped and fixed.
Oh, okay.
That's all.
I like it. Going to Vegas there, a little too much time at the speakeasy. Actually, I found that there are quite a few speakeasies. Ooh. One's in the Cosmopolitan or something. So if you're just like, I'll take a shot, let's go see if I can find Dustin, whatever the speakeasy is in the Cosmopolitan, I'll be either outside trying to get in or inside, because
you gotta look up passwords and stuff to those things.
Yeah, I don't know. I just saw, or actually a lady downtown told me, and I was like, okay, I have no other plans, so let's see what happens.
Yeah, I think you gotta know the passwords. And that's it. You're in, right? Isn't that how that works, or no?
How do you know the password?
I don't know. Like Tampa has an Instagram page, and you go there, and they'll post like tonight's password is.
What if you don't even know it exists? Like, how am I supposed to?
You're the speakeasy guy. I don't know.
I'm just gonna knock on the door and be like, yeah, Sammy.
Yeah.
I don't know. Well, I'll figure it out. If anybody knows, let me know, because I don't really want to stand outside and try to figure what. The what?
The gun show's in Vegas this week. They got a big gun show out.
Oh, it's the gun show and the World of Concrete.
No.
I was telling Joe, I'm like, I said, I'm going. He's like, dude, World of Concrete, man. He's like, it's going to be a great time. I'm like, I don't think that's something I'm going to go to.
That's pretty great.
But it's better than like CES or whatever. So anyways, we'll wrap it up there. I hope you guys enjoy the rest of your day. Remember, we won't be here tomorrow. I will see you guys next week. Please enjoy your weekend. Let's take you back a few years.